This video is on the technical analysis of NASDAQ100, which is also known as USTech, and at this point in time we're on the weekly chart. And just to recap, the last time we spoke about this particular index, we had mentioned that we had a huge W structure at that point, which had a neckline at that level, and we said that this neckline over here is also a very strong level of resistance, and that at this point we may potentially see the market actually reverse, right, or even move up for that matter. And that is because, as I said previously, we have that W structure which has a neckline at that point, and we would love to see the market actually close above that neckline, come back to the neckline to test it, and at that point is where we want to look for those potential buying opportunities. Just also remember that I had mentioned that due to the fact that we have this W structure, we also have a lot of stop losses that are located within that region, and that is because a lot of traders and investors usually buy on the second leg of that W structure. So it is quite possible that because the market is at a very strong level of resistance at this point in time, as we've had multiple rejections at that point, right, that we may potentially see the market actually move further down from that level to trigger all of those stop losses that are located within this region, and we may potentially get a fresh W structure, right? Anyway, I'm just gonna add my resistance level, and just also keep in mind that support and resistance are areas and not so much lines, right? So there goes our resistance area, and it's also the neckline of this huge W structure that I spoke about, right? And just keep in mind that at this point over here, where we have this neckline over here, is where at this point in time we expect the market to head to, and at that level is where we may potentially look for those selling opportunities, or the market may even break that level to continue up to this level, because at this level we have that candlestick, which is a bullish candlestick which has a small body and quite a long upper wick, and it tells us that we have a lot of liquidity at that point. To add to this, we have another one at this level as well, which is very much similar to this one in that it too is carrying a lot of liquidity, and you guys know that liquidity is actually money that needs to be triggered by the market at one point or another, right? But at this point in time, just to zoom in, expect the market to actually move further up at least to this level over here, and once the market reaches this level, then we will look at the picture again, evaluate and see if you want to be selling or buying at that point, right? Anyway, let's head down to the daily chart, and here we are on the daily chart. On the daily chart, I'm just going to start off by adding my daily channel as usual. Let's have a look. Just bear with me, guys. There we go. You could see that that's our daily channel more or less, and as far as the daily channel goes, we can see that we're in an upward trending market, right? And just remember that I had mentioned that at this point in time we expect the market to at least head to that level, and at that level we may potentially look for selling opportunities or buying opportunities for that matter. Anyway, here we are on the daily chart, and remember also previously I had spoken about how we have these candlesticks over here, right? And what they are bearish candlesticks with small bodies and long lower wicks, and they tell us that at the bottom where those wicks ends, there's a lot of money there, and that in the future we will see the market actually head down to grab some of those liquidity points because they represent money, right? Anyway, here we are on the daily chart. What do we see on the daily chart that we should be paying attention to? On the daily chart, I can see that we have this structure over here, which is an overextended W structure. It's an overextended W structure because that first leg is much lower than that second leg, and it has a neckline more or less at that point. And we can see that price had broken to the upside of that neckline, right, which is over here, and then came back to the neckline to test it. So what this tells us is that at this point over here, we should potentially be looking for those potential buying opportunities. So I'm just going to add a neckline for that structure. Just bear with me. And just to emphasize, remember that necklines are areas and not so much actual lines, right? But just for the sake of making sure that our charts are clean, I'm just going to add a line at this point, but just keep in mind that necklines are areas and not so much actual lines, right? So this is the W structure that I spoke about. There's a neckline at that point, more or less. We can see that price broke to the upside of that neckline, came back to the neckline to test it, and at this point where we have the neckline, we should potentially be looking for those buying opportunities, right? Nonetheless, we're not just going to buy just by virtue of having price reach that level. We need further confluence and confirmation before we actually make any buying decisions, right? Anyway, from here, what I'm going to do, guys, is head down to the H4 chart. Just bear with me. And here we are on the H4 chart. I'm just going to adjust my daily channel somewhat. Just bear with me. Let's have a look. Let's have a look. And just remember that we just need to ensure that whatever drawings that we do add to our charts are as accurate as can be. Let's have a look. Okay, that should be fine. Anyway, let's see what else is happening. Just to recap, guys, remember on the daily chart, let me just zoom in a bit. On the daily chart, I spoke about how we have this W structure, which has a neckline at that point, right? With the side being that first leg of the W structure and the side being the second leg, right? So what I'm going to do now is just utilize the Fibonacci retracement tool just to see if this level over here aligns with any key numbers that we have on the Fibonacci retracement tool. So just bear with me while I do so, guys. Let's see. Fibonacci. There we go, there we go, there we go, there we go. So we can see, guys, that in as far as this overextended W structure goes, which has a neckline at that point, we can see that the neckline, which is over here, aligns, we could say, with the 38.2% Fibonacci retracement level, right? So that adds as further confluence in as far as looking for potential buying opportunities goes, where we have that neckline, right? So we should indeed be looking for those potential buying opportunities at this point. Having said that, we still need further confluence and further reasons for why at this point we should be looking for those buying decisions, right, or entries, right? Anyway, another thing that I also want to mention that is very much important while we're still on the H4 chart is that as much as we have this huge W structure which has a neckline at that point, and I said to you guys that we want to see the market come back to the neckline to test it, and at this point is where we should be looking for those buying opportunities. Just also bear in mind that we also have an opposing structure in the form of an overextended M structure over here, which also has a neckline at that point. It's an overextended M structure because that first leg is much lower than the second leg, and we can also see that the neckline of the structure has been violated at this point, and that the structure actually started at this point, and then we saw the market go up, give us this double top. If we can just draw it properly, give us this double top, and ideally these kind of patterns, we want to see them end exactly in line with where they started, right? So it is also quite possible that we may see the market actually move further down to around this level in line with where it started, more or less, right? Hence I'm saying that at this point in time, as much as I'm saying that at this point we should be looking for those potential buying opportunities, we just need to be careful because we have an opposing structure in the form of this overextended M structure, right? Another thing that I also want to point out is that we may potentially have some liquidity at this point because of this candlestick over here, which looks like a liquidity candlestick as well, right? So I'm just going to add a neckline for that opposing M structure, and just bear with me while I do so. So we could say the neckline is more or less there, and just remember that necklines are not lines, they are areas, guys. They are areas, right? So what else do we see in regards to this chart? At this point I don't see much. I just want to add my H4 channel as well. Just bear with me. There we go, 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 right? And in as far as the H4 chart goes, we can see that we are in an upward trending market, and it's in alignment with the fact that we have this W structure, and that I said to you guys that at this point is where we should be potentially looking for those buying opportunities. Having said that, keep in mind that we have this M structure which started at this point, and we might potentially see the market move further down to around this level in line with where it started, and it may also happen that the market is only coming down to also test this opposing structure, which is a trend line, and at that point we might potentially see the market move further up, right? Having said that, just to recap, remember on the bigger time frames I spoke about, let me just go back to the daily chart. On the daily chart I spoke about how I expect the market, or we expect the market to reach that level over there,